What happens when one of the greatest companies in the world has a stock that stumbles a bit? That's what we need to ask about Starbucks. The company just reported a record-breaking quarter that still wasn't quite good enough for Wall Street. Hard to please. In-line earnings and slightly weaker than expected revenues, some would say. And same-store sales growth that at 6% was again, a little bit slower than some were looking for. And that's why the stock's down in after hours. Now, this isn't the first time Starbucks' stock has hit a speed bump. And in the past, whenever the stock has pulled back, it's been a buying opportunity. Will it be this time again? Let's check in with Kevin Johnson, the president and COO of Starbucks, find out more. Mr. Johnson, welcome back to Mad Money.
Hey, Jim, how are you?
Well, Kevin, I've got to tell you, I set up the situation tonight because there are a bunch of big cap stocks like yours that people felt, well, maybe the companies didn't do that well. I'm trying to distinguish between a company that did exactly what people were looking for and a stock that therefore reacted. Did you reaffirm what you said you would do going into this quarter?
Yeah, we certainly did, Jim. I mean, this was a very strong quarter for Starbucks, and we reaffirmed our guide for the rest of the year. You know, if you look at the quarter, we posted a 9% growth in revenue and an 18% growth in earnings per share. You know, I think, as you point out, some of the reaction may be related to same-store comps, but I think there's some information that people need to understand about that. We posted 6% increase in comps globally. But if you go region by region, there's a story under each of those regions. In our Americas business, we grew transactions 3% and ticket 5%, and it averaged then to rounded to a 7% comp. That said, the Americas grew 10.5%, would have been 11.5% adjusted for foreign exchange. You then move on to EMEA. We posted a 1% growth in comp. But the fact is, EMEA, we've been on a strategy to shift our company-operated stores to licensed stores. So if you look at the fact that 72% of the stores in EMEA are licensed stores, you really have to look at system sales. System sales in EMEA grew 4%. Now, if you then adjust for the stores that we transitioned to licensed partners and to foreign exchange, we would have posted a 7% growth in revenue in EMEA.
Let me just stop there, because I know we can do the same thing with Asia, where some people were looking for 4.5 when we got 3%. What I want to do is step back for a second and say, okay, you can just give you a little bit of a lightning round. Is mobile still working well?
Look, mobile is really performing very well. In fact, this quarter, about 4% of total transactions were mobile order and pay transactions in the U.S. Now, if you look at our top 300 stores, that number is 10%. 10% of total transactions in our top 300 stores were mobile order and pay. And then if you look at peak period, it's even higher. Mobile order and pay represented 20% of total transactions in our top 300 stores at peak. So our loyalty program, our active rewards customer base continues to grow, and our mobile order business continues to grow quite rapidly.
Okay, Kim, you're from a technology background. That's why I wanted to ask about that tech. But it seems like Starbucks is trading like the old days when you were at a technology company, a fine one, Juniper. Have we changed? Should we be thinking about Starbucks differently? You know, 3 years ago, we had almost identical situation. People tossed the stock out, down $3-4 in after hours, and then the stock doubled. Was there anything in here that, I mean, I look at that same-store sales in China, and I see China growing faster than I thought. I look at consumer packaged goods. I see it growing faster. I am not asking an executive at a company to say, listen, find something wrong for me. But to me, this was a business-as-usual, better-than-expected Starbucks quarter.
Yeah, I think without a doubt, every business segment contributed to our performance. It was a record quarter for us, and I think, you know, in every business, there is just a great story underlying those numbers. And in addition to that, we laid a lot of foundation for the strategic growth paths going forward, whether that's our new rewards program and our digital flywheel that we just transitioned to, or whether it's the announcement which we made in single serve, or whether it's the new roastery that we announced in New York to extend our Starbucks Reserve ultra premium brand. A lot of good stuff there.
All right, now let's talk about China plans. You're keeping with the 500 stores in the country every year for the next 5 years, and you're opening one that you expect to have your biggest numbers in the next quarter?
Well, certainly, we continue to be very, very bullish on China. We're now at 2,000 stores on mainland China. And I think, as you pointed out, our transaction comp grew 5% this last quarter in China. Certainly, as we look at the opportunity ahead, we continue to be bullish, and we plan to build 500 stores a year for the next 5 years in China. There will be a day that China will be bigger than our business in the United States.
Big change in Japan that we have to start incorporating, right?
Yeah, this is the first quarter that we have included our 1,100 stores in Japan in the CAP comp number. And so I think where we posted a 2% growth in transaction, a 2% growth in ticket throughout China, Asia Pacific, that then averaged to a 3% comp. So certainly Japan will continue to be part of the comp, but China is growing 5% in transactions, much faster than the average for CAP.
All right, Kevin,
and in fact,
let's leave it
China,
at that.
In the largest.
Right. Let's leave it at that. I think it's a strong quarter. You and I both feel that way. Let's see what the people think. That's Kevin Johnson, President and Chief Operating Officer of Starbucks. Look, this is the way Starbucks trades, okay? It goes up a lot. It reports a terrific quarter. People decide the quarter's not enough. It then goes down. A few weeks later, they think about it, and then they buy it. It has been the pattern that I've seen time and again. I didn't hear anything different from Kevin Johnson that makes me think that this is not going to be the case again. I say stick with Starbucks and stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.